Ladies and gentlemen, welcome to March 10th, 2020 Daily Update with Invest with Alex. Well, we certainly missed all the fun yesterday, another historic day in the stock market, as you very well know by now. We've been having quite a lot of them lately. 2,000 points down yesterday, 1,000 points up today, quite a bit of volatility. So what does it all mean? Well, from our vantage point, not very much at this point in time. It appears our forecast has, our forecast hasn't shifted. Basically, our long-term forecast remains. What I'd like to do today is introduce you our projected bottom that we anticipate in July or June of this year. The actual bottom, according to our time cycles, arrives or should arrive on July 1st. So between now and then, most likely what we're going to see is a lot of volatility, as we've been seeing over the last couple of weeks. And but the most important takeaway from all of this is that the stock market should bottom into that July 1st time turning point and then have a fairly powerful rally out of it. As I've mentioned in our weekly update, the preliminary price targets, and don't quote me on them yet because we're going to have to wait and see if the market confirms. Preliminary price targets are approximately 19,500 on the Dow Jones for this particular bottom. But once again, we're going to have to wait quite a bit longer before we begin to see whether or not the market is confirming that particular forecast. But the time cycle is not necessarily in doubt. It is very strong time cycles, and I fully anticipate to see a significant bottom at that juncture. Let's shift to the short-term work and see what the stock market has been doing over the last couple of days. So if you recall, basically our short-term forecast hasn't changed very much. If anything, the stock market is making things a little bit more complicated because of these structural gap downs over the last couple of days. So in addition to this one 2 weeks ago, we had a massive one here, another one here, and then of course a massive gap down from yesterday. All of those gaps will have to be filled eventually before the market can initiate a much more sustained decline into our July 1st time turning point. So if you recall, in our weekly update, I talked about the possibility of the market. Most likely the market is setting into a trading range of around this area, and it's likely going to continue into September. At that point in time, some sort of a bounce stop will be put in place and the market will reverse and then collapse into our June-July time turning point. Of course, another interpretation at this time is that if you recall, we previously assumed that this was wave number 1, 2 up, 3 down, 4 up, and 5 down. It was completion of the first wave down, and that could still very well be the case. So if so, then we had a bounce here, and then we are still basically in early stages of a massive wave 3 down. So that could still be the case, and if so, we'll see further declines over the next couple of days and weeks. And most likely what we're seeing here at the bottom is wave 1 bottom, and then we'll see a bounce maybe up to this line and then continue to sell off. However, another interpretation of this is that this whole thing was wave 3, not wave 1, 2, 3, 4, 5. And if so, this was wave 4 and this wave 5, which completes the first wave down of the structural composition of this decline. And if so, then we should experience a bigger bounce up to the line, a little bit down, and then break above to probably around this area, 27.5, before reversing over and collapsing into our June-July time turning point. So plenty of time for this to happen. What's the takeaway from this? Well, the stock market, I said earlier, if we break down below this level, 24,500, the likelihood of wave 3 beginning the sell-off is very high. And that could very well be true. But we're going to have to wait a little bit longer and see this particular bounce from today. So it's important the market closes this gap down from Monday. And if it does and gets to this line and then reverses lower, and it has a completed bounce structure, then we would be watching this level very carefully, because if it breaks below it, then it would indeed confirm that wave 3 is in fact developing. If, however, we penetrate this red line, then the likelihood that this entire thing was wave 1 down, and now we'll experience a bigger down, will go up substantially. So it's wait and see. And I personally, unless you're a trader, I don't want to participate in this trading range because of the how powerful the moves have been. We're looking at the chart, and it appears that there isn't much movement, but 24,000, 29, there's almost 6,000 points on this what appears to be just 20 days, up and down, up and down. So it's a bit risky. The primary takeaway from all of this should be that we should be concentrating on the bigger time turning points and the longer direction of this stock market. And I talked about that earlier. So once again, to repeat, we anticipate most likely we're going to be stuck in this trading range a bit longer into probably late April, and then we're going to reverse and collapse into our July 1st time turning point. It is at that bottom that a lot of money could be made, whether you short now or you're going to play on the long side, bouncing out of that bottom. So that's what's important. Short term, the market hasn't really clarified itself. It's still highly unpredictable, but we have a benchmark, this particular trend line, which will tell us if this was wave 1 and now we are in a bigger bounce, or if this was a wave 2 bounce and then we are now initiating our very big sell-off. That's it for today. Thank you very much for spending a few minutes with us, and we'll be back with another update tomorrow. Have a wonderful day ahead. Bye-bye.